Hey everyone, welcome back to the channel. Just wanted to make a quick video today on April 3rd because the markets are tanking heavily today, especially the US markets, but pretty much markets all around the world because of the Trump tariffs, right, that have been, I guess, put into effect. You saw the speech that he did with those boards, and you see a picture of those boards there yesterday. So it looks like he's basically doing reciprocal tariffs. You have the numbers for each country. Some of them it's a match. You see European Union, which is fairly important, 20% there. So some of them he's matching, some of them it's about half. I was actually very surprised. If these numbers are right, by the way, I don't know if these numbers are right, but I doubt he would show it if they're not right. But if we look at Cambodia, 97%, he didn't do 97%, he did 49. Or Thailand, 72, he did 36. South Korea, he's doing 25. Meanwhile, they do 50 to the US. So it looks like it's not even reciprocal, if you ask me. It's generously reciprocal. But anyway, I don't want to talk about the tariffs and what I think of them. I guess if you want to hear my opinion, I understand his long-term plan of why he's doing it, that he wants to bring back manufacturing back to the US. And him and his cabinet members, the commerce guy, who's absolutely in love with Trump, if you haven't noticed, a lot of them have mentioned that there's gonna be some short-term pain, right? Short-term pain for long-term gain. And that makes sense because if you're disrupting whatever, the prices right now, I'm thinking prices are gonna go up, et cetera, et cetera. So there could be short term, but I see the long term vision that he's doing. I also know, I've read Trump's Art of the Deal book, so I know his negotiating style. Basically, in chapter 2 of the book, he literally lays it out there. He says, when I negotiate, I like to go in completely crazy, and then like pick up the pieces and negotiate, right? So I think this is really a way to renegotiate with all these different countries, especially like European Union and Canada and Mexico, et cetera, which are a little bit more important for trade. But anyway, I see the long-term vision he's doing. I'm not saying I agree or disagree. I don't want to get into that. I don't know if it's gonna work or not. I have no idea, but I'm making this video to really ease your concern if you're maybe a newer investor, because there's always new PII members, right? Maybe you started investing in 2023 or last year 2024 when things are really, really good, and you haven't been through your first crash. Well, this is not really a big crash, but volatility, a big spike in volatility. So one thing and by the way, let's just take a look, right? So if we take a look, I'm filming this at 12:45, which means it's 1:45 Eastern. If you look at the S&P, it's down about 4% in one day, which is very, very significant for the S&P 500. Nasdaq even worse, 4%, a little, about the same. Canadian market about 2.88. So these are pretty big one-day drops. Bitcoin relatively holding pretty strong, actually, still over 80,000, which is surprising. But in terms of my personal portfolio, you could see that right now the value is 1.37, which is a lot less than my last portfolio unveiled. And by the way, I'm showing this with Stock Unlock. This is a new portfolio management and stock analytical tool I use. I got a link in the video description below. Really, really cool app. Just have to do that plug there. So make sure you and there's a free version, guys. So even if you want to try it, sign up for free. Still use my link, because if you upgrade after to the paid version, which unlocks many features, you get a 10% discount. So you see now it even dropped a little bit more, 1.368, right? So if you look at my Excel sheet here, let me just update it to 6.8, if you will. You want here. So I'm currently down about 15% overall in terms of my capital, right? So this is just the capital, right? Nothing to do with the income, the capital. So yeah, it could be a significant drop, right? You could be worried, you could be scared. So I'm just gonna tell you what I'm thinking about it and some advice to you. So the first things you will hear, first of all, if you watch the news, it's going to be an absolute disaster, right? It's going to be like it's the end of the world. All the headlines are going to be negative, especially if you're watching the left-wing mainstream media. If you're watching Fox, they're going to say, oh, it's not so bad, and ignore the pain for the long-term gain. But either way, guys, what you're going to hear is typically always the same thing. This time it's different. This time it's different. But I have to say that argument really sucks because yes, this time it's different, but it's literally always the same, right? Yes, it's different, whether it's COVID, whether it's a black swan event, whether it's the first trade war during Trump's first term, whether it's the financial crisis of 2008, the Great Depression, blah, blah. It's always different, but it's kind of always the same. There's always going to be some volatility in the stock market. It can't just go up forever. So the first piece of advice I will give you if you're a newer long-term investor watching this, not a trader, right? Because traders, obviously that trade day to day could be in trouble, but that's not my problem. We're in it for the long term. When in doubt, remember this, when in doubt, zoom out. So this is a pretty cool saying I've been seeing in our Facebook group. And by the way, I'm very proud of you guys. In the Facebook group, I've been seeing a lot of people say, I can't wait to buy. I wish my dividends were here. Dividends are coming next week, guys, and I also cannot wait to average down. And my plan is probably just to put, I'm expecting about $20,000 in dividends, right? It's basically $25,000 minus that 25% tax. So I'm scheduled to get about 20 grand, and my plan is probably to put 5K in HYLD, 5K in QQCL, 5K in HHIS, and 5K in MSTE. That is my plan, but more of that next portfolio unveil, you'll see that. But if you actually, the one day is very scary, but if you actually zoom out and look at the 5-year, for example, right? This is not like 10 plus years. This is just 5 years. I wish there was 3 years and 10 years, but there isn't here. It obviously looks, sorry about that, move my face there. It obviously looks a lot less scary if you zoom out, right? You see that in the last 5 years, even the last 1 year, the S&P is still positive. Same type of story for the NASDAQ, right? Which is, the code is NDX. If you zoom out in the last 5 years, it's up 149%. Same thing for the Canadian stock market, right? Could be very scary in the last 5 days or 1 month or whatever, but if you do 5 years or long term, it doesn't look scary at all. So remember, we're long-term investors. That's the first thing you need to think about. Remember that also the media will tends to completely exaggerate, right? And that just adds to people's fear. So you guys got to remember that this happens. The stock market does not just go up in a straight line forever. There could be volatility. Here you see the last 40 years, the S&P 500. You could see that there's negative years, but you see that there's pretty much never more than 3 years in a row, the 2000s here. Never 3 years in a row of negativity, of negative returns. So if you're in it for at least 3 or 5 plus years, guys, as a long-term investor, this shouldn't worry you, right? The monthly, the day-to-day should not worry you at all. And I'm not worried at all, even more so because of the system I've designed, right? So my system is to invest in covered call ETF. So yes, covered calls lowers your volatility. If you add 25% leverage, it kind of balances out. So like I actually have an upcoming video to describe in detail how risky is my portfolio. But essentially, the risk of HYLD and USCL is approximately the same risk as owning an S&P 500 index fund. QQCL, approximately the same as owning a NASDAQ 100. HHIS, owning the portfolio of 14 stocks, right? So my system has been designed. If you're an income investor, you do kind of what I do and you invest in the same types of funds that I do. The system has been designed to really focus on the income. And that is what your return is. And that translates to us being much less dependent on what the market does. Let me explain. If you're a growth investor, like you're investing in single stocks or passive index funds, you're barely getting any income. You're more dependent on the stock market going up than I am because you have to buy low and sell at some point. With these types of investments, these types of covered call ETFs that pay monthly, I never have to worry about selling anything ever. So I'm not as dependent on the market, let's say I'm going to say were to make you feel more comfortable, we're not as dependent on the market going up than growth investor, because we're going to get paid every single month. In fact, if you just follow my playbook, which is, what I'm going to be doing probably for the rest of my life, is just reinvesting every single month as much as I can, paying my bills, paying off everything, reinvesting the rest. So if I'm never going to sell anything and I'm always going to reinvest every single month, do you want to buy it? This will accelerate the income growth, right? Because you're buying cheaper shares instead of more expensive shares. So this is actually an opportunity for all types of investors, whether you're income or growth. If you buy more, if you average down, it's always good. But as an income investor, I'm actually accelerating my income growth. I'm focused more on increasing my income every month than my capital. My capital doesn't make a difference to me. It doesn't change my life because I'm not selling it, right? I'm not planning on selling it. So it doesn't really make a difference. What makes a difference is getting more and more and more income every single month. So if you just follow the golden rule or my playbook, where you're not selling anything and reinvesting as much as you can, you're actually this is a great thing. Crashes, corrections, volatility is a good thing, because you're increasing your income faster, right? Because you're buying cheap shares. I had this discussion with Steve Bavaria as well, who's also an income investor. He's more of an old school closed-end fund income investor, but we discussed that in 2022, which was a crappy year, he increased, just like I did, he increased his income faster because shares were cheaper. So hopefully you get the point. Another thing is that, remember, covered call ETFs actually thrive in this type of environment because the VIX is going up. Volatility is going up, right? So you see that today, just today, it's up 27%, 28%. This is pretty significant. This is pretty crazy. Now, if you look at the last year, you see that big spike. What happens when volatility goes up is that call premiums are richer and go up. So ETFs that write covered calls are taking in more money. They're taking in more premiums, which help to sustain the distribution. So remember, covered call premiums are based on two things, everyone. Volatility, which is up. The higher the volatility, the more premiums you'll bring in. But also net asset value, right? So if it kind of balances out. So right now, for example, things like HYLD and QQCL and USCL and HHIS, which are in my core positions in the portfolio. Yes, their NAVs are declining, right, with the market. So, for example, if I just look at what they're doing today, HYLD is down 4%, USCL 6%, QQCL 7%, 7.5%, HHIS 7%. So yes, their NAVs are decreasing by 4, 5, 6, 7%, which means if they write a new round of covered calls for that month, they'll take in less premiums, but the volatility is spiked. So yes, the NAV is less, but the volatility is higher, so the premiums are richer. So it kind of balances each other out. So now let's discuss the worst case scenario for my portfolio and as a covered call income investor. What is the worst case scenario? Well, again, as I explained, volatility of my capital makes zero difference to me. But what makes a humongous difference is the income coming in. So it's possible, worst case scenario, guys, if volatility starts easing down and the NAVs don't recover for a long period of time, there is a possibility that HYLD and USCL and QQCL and HHIS lowers their distributions a little bit, right? So that is, to me, going to be the worst case scenario. We know that HYLD, USCL, QQCL have actually recently increased their distributions because of how well the market did in 2024, where NAV is going up and up and up, volatility staying more or less the same, which means they're taking in more covered call premium. So they've raised their distributions, right? QQCL raised it from 25 cents to 29.5, et cetera, et cetera, et cetera, for USCL and HYLD a little bit. So my personal prediction, I hate making predictions, is I think HYLD, USCL, QQCL, I think the distributions are definitely sustainable for the time being, but I am, or I could expect, and I won't be surprised. Let me just say it that way. I won't be surprised if they end up reducing their distributions a little bit. This is not saying if they do that, it's not to say that the funds are behaving badly or they're performing terribly. They're just taking into account of what's happening. Remember, QQCL is NASDAQ 100. USCL HYLD is the S&P 500. Another small note on USCL, on HYLD is, since HYLD is hedged to the Canadian currency and the US currency has gotten weaker finally, this is why you see HYLD is down less than USCL, right? So remember the currency conversion. If you're, there's always talk about USCL versus HYLD. The main difference is the currency risk, and this is where I always say it kind of the opposite is also true, right? If the Canadian dollar gets weaker, it will benefit USCL and it will negatively impact HYLD. But now the opposite is happening, so the opposite is going to happen as well. So having HYLD and USCL kind of balances out the risk of the currency. Just wanted to point that out there. By the way, the same goes for HHIS, right? Volatility is spiking on all of these stocks, especially because they're mostly NASDAQ stocks, except Costco. Costco is actually up to date, I think. And by the way, HHIS, their page has been updated, so HHIS is now a lot more boring. There's 14 stocks instead of 9. You actually have it here. So it's possible, guys, you got to expect maybe that HHIS or any one of these ETFs reduces their distribution, and that's okay. I kind of expect that. I won't be surprised. For split funds, remember that these are highly leveraged, even more than 25%, so they could drop down really quickly. And if these NAVs, start going, this is the NAVs of the Class A share. So if they get under $5, and which means the unit NAV is probably under $15, we could expect Class A shares to suspend their distributions, right? Like DGS and DFN are typically always flirting with the 15, 16 unit mark, but things like GDV is way above 21 here. You have LBS and SPC, a lot of them in the 9. So I don't expect it to happen soon, but it's possible if the stocks keep going down and down and down. But these are mostly Canadian stocks, which are, I guess, going to be impacted a bit less than the US stocks for now. But remember that they just launched an all-in-one Class A share. They basically solved this problem, and I have an upcoming Q&A with Brompton to discuss their new ETF, Class A, CLSA, which stands for Class A, which is an all-in-one Class A split share fund, which literally solves the problem of missing dividends or suspending dividends, right? So we have a lot of tools as an investor now to withstand this as a covered call income investor. Personally, guys, I'm not worried at all, to be honest. Yes, my portfolio value is going down, but my income is not, and it's going to be increased over time. And yes, maybe they're going to get reduced, but that's okay. That's expected. And when it recovers, I'm sure they'll recover as well. So in short, guys, don't let the media scare you. Don't let fear set in. Fear is literally the worst thing that you could do. Another thing that you could really cause harm is if you start panic selling right now, right? If you start selling stuff and rebalancing your portfolio right now, so taking losses, for example, selling S&P 500 stuff, NASDAQ 100 stuff, technology stuff, and moving it to more stable stuff like utilities, that's kind of like portfolio rebalancing. I would not do that now. Because if you sell at a loss, you're actually realizing those losses, and you're probably going to miss out. You're going to miss out on the recovery, right? Because yes, utilities are more stable, but if the market shoots up again, whether it's weeks from now, 6 months from now, a year or two from now, when all of this fear blows over, and it always does, right? We'll see if Trump's plan actually works, but it's gonna be at least a couple of years, right? Well, my point is that if you do that, if you panic sell and switch your portfolio to utilities or healthcare or more defensive stuff or bonds, not only are you taking a big hit, a real loss, right? This is not a real loss, guys. It's on paper, but if you do that, you're taking a real loss, And then when the recovery happens, you're not going to recover as much. It's really, really a bad idea. If you want to do that, wait till it blows over, and then you could adjust your portfolio if you feel like this is something you can't stomach. This is volatility you can't stomach. For me, who's been around the block, who's been through the absolute disaster of COVID, where we had a 30, 35, 40% drop. I remember my portfolio dropping 35% at one point. This is 15. This is nothing. I pretty much held firm. Yes, I readjusted my portfolio a little bit, but my whole concept was I'm not just going to panic sell everything. So go through it, enjoy it. If it's the first time, it's more scary. But if this is your second or third time, you guys know the drill. You know, not your first rodeo. Stick to the plan, keep reinvesting, buy as much as you can, because these are big buying opportunities. And remember guys, always look at the last 5 years and max. Because remember in 2008 here, when it was an absolute disaster and people said it's the end of the world, well, what happened? It recovered. Same thing at COVID. Look at this big drop. They were probably panicking and saying the same things now, but look what happened. It went back up and skyrocketed. 22 was not a great time, right? It went down. The Nasdaq especially did not have a great time in 2022. It went from 15,000 to 10,000, but guess what? Now it went to 21,000. Now it's at, I guess, 18 or whatever it's at, 18,000. So if zoom out and think long term is really the key to staying cool, calm, and collected. So hopefully I didn't forget anything. A couple of, a big mishmash. I'm just doing this video at the top of my head here after a discussion I had with my wife during breakfast. And the point is really to keep cool, keep calm, and I'm with you. We're all in it together. I am definitely not selling anything. I'm only going to be buying as much as I can. Next week, I'm going to be buying more once the dividends come in. And if you want a sense of community, remember, we do have a private Facebook group, and I know many of you have been messaging me saying it's hard to get in. It's private. The link is in the video description. You gotta like the Facebook group, and that should send you an invitation automatically. Sometimes it doesn't work because of your Facebook profile, but drop me an email if which is all on my website. You contact us via our website. Everything in the video description below if you're having trouble joining the Facebook group. Also, you could join the PII Inner Circle. I'm about to schedule another live Q&A for next week. We do that every 2 months where you guys could submit questions and I answer them live. And as a second level member, you actually have access to our Discord community. So click on the little join button next to the subscribe button if you want to learn all about it and join that community as well. I know a sense of community really helps, but remember that the system I created, guys, it's designed to withhold during this because we're not dependent on the market, right? It's all about the income, and now we could grow our income further. Yes, there could be temporary or some reductions, but I personally don't expect that with any of these here for the time being. Of course, the more we go down the list, I think the more chance there is of a reduction. And if they do it, it's because the fund managers are being prudent. So maybe your income is going to drop, but the income, no matter what, you'll still have a significant amount of income coming in. I don't think, if HYLD or USCL or QQCL or HHIS reduce their distribution, it's not going to be cut by half, guys. It's going to be maybe cut by 5, 10, 15%. And again, remember, covered calls benefits from higher volatility. It's the covered call premiums that you get is based on NAV and volatility. So volatility spiking really offsets a lot of the NAV decline. So this is why I personally think we'll be able to hold on here in terms of distribution. So keep thinking long term, guys. Don't panic. Don't let the fear set in. Go outside. Get off the news, get off the media, check back in after a week or two, or if better yet, never, and everything is going to be okay if you think as a long-term investor. So give me a thumbs up. I'd really appreciate it. Let me know if you have any comments, any questions. Let me know what you're thinking here about these tariffs, and do you think they're going to work? Do you think the stock market is going to boom in the next couple of years for the US? I know that, it's going to take time, but employment is going to go up. in the US. And I think interest rates are also going to come down, which should also help the recovery. So personally, I'm not worried. I think this is a long-term plan that the US has. Obviously, a big impact on my portfolio, which is really, really focused on the US, but I'm really not worried. I think of it as a buying opportunity. So hopefully I'm right. We'll see what happens. Take care, everyone. See you next time.